What's up guys, Lennon Lee here with Passivo Real Estate Investments, and today we're going to be talking about the active side of passive investing. And you heard that right, there is an active side to being a passive investor. But I'm not talking about being a landlord. I'm not talking about 2 a.m. calls from a tenant about a clogged toilet. I'm not talking about going to the properties to collect rents or anything like that. What I'm going to be talking about is the activities and the things that you need to do to make better investment decisions, and the things that I believe we all should do to become better passive investors. So let's get right into it. First of all, let's agree on one thing. If you are a passive investor, or if you're looking at passive investment opportunities, it's because you're probably thoughtful about your time. You're probably thinking of, okay, eventually I want to achieve financial freedom. And we love that concept, but here at Passivo, we actually call it time freedom. We like to look at it from the perspective of the real asset, which is time and not money. Why do I say that? Well, ultimately because that's the actual goal. You want to get to that point where you no longer need to trade your time for money, but instead you have your money work for you. So if that is the case, then isn't it smart to think about different things or strategies that you need to put in place or you need to do in order to not have that investment capital be at risk? Okay, so how do you mitigate the downside in your passive investments? And bottom line, how do you become a better passive investor so that you can get there quicker? All right, so finally, let's get down to business, right? When it comes to real estate and when it comes to passive investing in real estate, before you're actually a passive investor in a deal, here are the three major group of activities that you need to perform, basically, if you want to be that good, responsible, informed, passive investor. Okay, so the first group of activities is going to require a lot of time from you, but not money. Okay, the first group of activities that I'm referring to is research and learning and reading and basically educating yourself. Why do I say that? Well, to be a passive investor in real estate, there are many different options, right? It's all going to depend on your goals. It's all going to depend on your risk tolerance, and ultimately it's going to depend on how is it that you feel more comfortable doing business in real estate, and ultimately giving up control. Like we talked about at the beginning, if it's going to be passive investing, you need to be giving up control. But different vehicles have different pros and cons, like everything, right? So for example, you can be a passive investor in REITs because maybe you value liquidity a lot. If you don't value liquidity that much, but instead you value the fact that you're going to access the tax benefits of direct ownership of real estate, then you might want to consider a real estate syndication, which is the vehicle that we use. Or you also have the option of providing investment capital to house flippers. Maybe you want to be a private lender. Well, all these vehicles and all these options have, again, different pros and cons that you need to learn about, that you need to understand. And ultimately, you also want to understand what's the underlying asset that I'm investing in. So that means that you need to spend the time to understand, well, how does how does house flipping work, or how does a REIT work when it comes to distribution? Do I value more cash flow, or am I in this investment vehicle because of the appreciation play? Well, you need to understand how all this real estate, all these different real estate strategies work, and basically make a decision on deciding if you want to do all of them, what percentage of your real estate portfolio do you want to allocate to which vehicle. So all of this is going to take a lot of time. It's going to take a lot of reading, a lot of podcasts, and ultimately going even to free events in your local community about real estate, and basically, again, understanding and identifying really the best investment vehicle for you as a passive investor. And then on the third set of activities that you should be performing before you go as a passive investor into a deal, you're gonna have activities related to analyzing or underwriting or vetting an investment opportunity as a whole. And the reason I use those three words is because there are three major components to an investment opportunity. You have the operator, you have the market, and you have the deal. So with the operator, you need to vet them. You need to spend time building the relationship, not only at the professional level, but at the personal level. You need to travel. You need to meet with these people, have lunch with them, go out with them, and ultimately build a relationship where you not only feel confident in their ability to execute and their track record and look into their backgrounds and do all of that, but also understand that you need to be at peace with passive investing being a passive investment, meaning you need to be at peace with giving up control. And you are giving up control to this team, to these people, to this operator. Well, if you're gonna do that, you need to trust them. You need to like them, okay? Ultimately, it's not just about the money. These people are making me money, I don't care about anything else. Well, yes, that's true until it's not, right? What I mean by that is that eventually some things might go wrong. How are these people communicating with you? Do you believe they have integrity? How do they treat their family? Have you been able to witness that? Or have you been able to share with them? I mean, I know this is, this would be like the ideal case where you do all of that, but you need to be doing most of that anyway, so that you are comfortable with the team that you're invested in. Then you have the market. Does the market have the right ingredients for an investment, real estate investment? I guess environment. I don't know. Does it? You need to understand what metrics, what components make a good market. Okay, employment growth, job diversification. Are people moving into the area or moving out of the area? So there are major. What's the crime rate on the area, whatever. Like there's all this bunch of metrics that you need to understand so that you can identify the market, because that you can't really control. The property, once you're in the property, you can do things to make it a better property or a worse property, but you can't really make a better neighborhood unless you buy a bunch of properties in the neighborhood, but that's a different conversation. And then on the third line, basically you have the underwriting of the actual deal. What's the business plan? What's the cash on cash return? What cap rates are they using? Am I able to understand and read and analyze a rent roll, a trailing 12 financials? What assumptions am I gonna make to see if these numbers make sense? Do I have information on the comparable properties to see if the business plan that the sponsor put together makes sense? You need to be able to conduct your own independent analysis so that ultimately you really feel confident to go into an investment opportunity and ultimately have a good relationship, again, with the sponsor, but with the whole deal or with the deal as a whole. So, I mean, there you have it. That might sound like it's very overwhelming. It's because it is. It's a lot, and I understand, and it takes time and it takes money, but ultimately, that's the job. That's the active side to passive investing. The second group of activities that you're going to be performing are all related to team building. When it comes to real estate, as we mentioned before, you have different vehicles to be a passive investor. So different vehicles are going to allow you to take advantage of different things, right? If it's a REIT, you're going to be able to have more liquidity. If it's a real estate syndication, you're actually going to be a direct owner of real estate, and ultimately you're going to be able to take advantage of the tax benefits that real estate provides, right? So if that's the case, you want to make sure that you have these professionals around you that are going to help you put your house in order before you deploy your investment capital, and ultimately allow you to do it in the most efficient way. Okay, so if we're talking about, naming some professionals, then we're talking about CPA that specializes in real estate. You want to make sure you have that in your team. you want to potentially talk to a to a estate planning attorney, because maybe if you're investing in real estate for the short-term benefits, then that's great. But maybe you're also investing in real estate for the long term, and you're using real estate investments as a wealth transfer vehicle. If that's the case, then you need to legally have all of your entities and your structures in place so that you are able to efficiently transfer wealth to the next generation. Not only that, but then you also want to make sure that you look at your investments from a portfolio approach, meaning you want to maybe have your financial advisor look at your whole portfolio and say, well, this is how much we believe, I believe you should allocate to your real estate investments, and pay attention to that and make your own informed decisions. But again, these professionals are going to advise you and help you become a better passive investor at the end of the day. And just to close that, another activity that you're going to be doing in this second, group of activities is a lot of networking, right? Because yes, you have the actual professionals that are helping you with the legals and the taxes and all that, but you also want to make sure you have other investors like you, other real estate professionals that are also investors, in order to bounce ideas of each other, in order to sit down to have coffee and discuss a real estate deal and identify different investment opportunities together, or identify potential risks on an opportunity. So all these professionals and all this team is going to allow you to ultimately achieve your goals, not only faster, but in an efficient way, and achieve them the right way. Well, there you have it, guys. Ultimately, 3 major group of activities that you should be performing if you want to call yourself a good passive investor, a responsible and thoughtful passive investor. First of all, a lot of education. Spend a lot of time identifying the right investment vehicle, understanding the different asset classes, understanding all the benefits that real estate has for you, and basically, understanding the real estate business as a whole. Then building a team of professionals that are going to help you tap into the real estate industry and tap into real estate opportunities and all the benefits that real estate has. Building this team to help you do it in an efficient way, and in a way that's sustainable and that's going to be transferable to your next generations. So basically, a team of professionals that are going to help you not only with an investment, but really to build a legacy for your for the next generations. And then thirdly, being able to call yourself a good analyst, being able to call yourself a good underwriter and a good relationship builder, because that's what it's going to take to ultimately achieve your time freedom goals. The way we think about it is, yes, it takes a lot of time, it takes a lot of effort, but what's the alternative? Should you just not do anything like that and just trust someone and give them your money and that's it? Well, there's no right or wrong. Actually, we at Passivo, we believe there's a good middle ground where you are educated, where you are the best passive investor that you can be, but you also have good relationships of trust with groups like ours or other sponsors in the industry, that ultimately you get to the point where you say, well, I know how these people operate. I know and I trust them. I have a good, solid relationship with them. I understand the whole business model. And at this point, I know I don't really need to be spending all that time and money. Okay? Well, awesome. When we get to that point, I think if we get to that point, I think we've done something right. So again, there you have it. Hope you enjoyed the content on this video. And if you want to learn more about what we do at Passivo Real Estate Investments, then please check out the website, www.passivorei.com. And more importantly, we have written a book for you about the new American dream, the way we see the new American dream, and how real estate, it's, you know, the vehicle that we've chosen, and just basically a book about our whole passive investing philosophy here at Passivo Real Estate Investments. So if you are interested in the book, come to passivorei.com/dream, and you'll be able to download it there. And please let us know what you think about it. And I guess we'll see you on the next video.